So everyone is whispering the same thing right now, that we could be heading into another 2008 crash. But here's the truth that no one is talking about. You go on things like the news, social media, finance page, and you hear things like the economy is shaking, debt is rising, the market is at all-time highs, banks are under pressure, and then people are fearing right now. But there's no need to panic. See, most traders miss things and have to understand this, that crashes don't happen during noise. They happen during under certain conditions. And if you don't know what to look for, then you can either be too early or caught too late. So I'm going to be breaking down, what to look for, what to expect, and as far as that, and then as far as what is price action showing us as of right now. But before I get into that, make sure you hit the like button, hit the subscribe button as well for more, market daily breakdown and more about insight. All right, so let's get right into it. Now, I don't, usually, look at fundamentals. I'm actually a technical person and what that means is I mainly focus on looking at price action. What is the chart telling me? So I'm kind of still getting new to this whole fundamental analysis, using it with my technical analysis. So we're gonna read this what AI is telling me right now. I ain't gonna lie, AI is like really a huge help. Like when it comes down to fundamental analysis, I would like ask a certain question and it'll tell me certain stuff, right? So um I have it. So what it's telling me right now, right? So this is the bond market stress. So bonds are very important. So right now it's saying that it's still stable. So there's no sign of credit freeze, no sign of funding stress, no sign of panic demand for safety. So this is still not a crash setup. And then as far as like liquidity conditions, right? Um, we have fast tightening, policies mistakes, and shocks withdrawal. So we don't have that yet, right? So and then as far as like let's see. Leadership is still narrow. Indexes are still leaning on large caps like AI tech type streams. So let's see. This is still the biggest early warnings, but by itself, not enough cause to collapse. So then you have stuff like the labor market. So that's still stable. Consumers are still active. Earnings are still supportive. So there's no recession yet. And then you got forced selling risk. So there's still no banks failure, no hedge fund blow up, no debt crisis. Um, so pretty much overall, what this pretty much is saying is that the market is not in crash mode, but it also is not in safe, easy uptrend mode, and in the easy uptrend mode anymore. So we are in what's called a late cycle. That means the system is still working, but it's still more sensitive, right? So translation in plain English, what does it mean? The economy hasn't cracked, job hasn't rolled over yet, no major financial stress, no forced selling. So a 2008 style crash is not setting up yet, but leadership is narrowing, liquidity is tight, market strength isn't broad. So the market is becoming, less stable, more emotional, and more reactive. So what to expect? Based what it's saying is you can expect sharp drops, fast rallies, fake breakouts, rotation between assets. So that's kind of pretty interesting. Reading this from a AI standpoint as far as fundamentals, right? So that's why it's very key to like really do your own research and see what's going on. Because when you look at the headlines, yeah, they are putting fear in people's heart. And like I always tell people, when there is fear, that's opportunity to buy. Now, it doesn't mean that the market can't crash. Is there signs? Yeah, there's definitely a lot of pressure going on. We can see ourselves. There's definitely a lot of pressure, especially how high everything is and the tension that's going on. Even with the whole AI thing, So, but let's see what chart telling us. So this is S&P. So S&P 500 is very important to look at. And why is S&P 500 very important to look at is because this is a leading indicator of all other stocks. If S&P is in the uptrend, then guess what? You can expect the market to every other stock to continue going up, right? If S&P is going down hard, then guess what? Every other company is going to be going down hard. Same thing with Nasdaq. S&P and Nasdaq move the same way. Just Nasdaq is more volatile than S&P, right? So, um, but before we look at S&P, let's actually look at the VIX because the VIX is very important, right? When looking at S&P. So I got this down to a science. If we look at the VIX, we can see here that just from history, right? So what these are that we're looking at right now, just from history on the VIX, right? Every time price is below here, that's actually good for S&P, even if it push up to here. Usually, just based on history, when the VIX push up towards, like, 21, then we can see a huge like some kind of retracement or drop in S&P, right? Anything above 22, at that point we could be seeing S&P drop. So right now we are at 21. So 21 lets you know, okay, hey, look, S&P could be, either getting ready to drop. It depends on if it go past that, right? Because usually, just from history, every time we get to 21, S&P, the VIX usually drop back down between 17 and 13. So right now we are at 21. So if this keep rising and get above 22, then obviously that's not a good sign, especially if we keep pushing up, because we can see on history that every time that this was above 22 and we had this huge spike, this is when you can see S&P drop very hard. So it's actually very good to look at the VIX, because the VIX help you understand, I guess you would say it, fear, so pretty much like, in other words, when S&P is 22 and above, that means there's a lot of fear in the market, and you can be expecting, S&P to drop. And if it's like, below 21 and lower, especially going towards, 17 and 13, then that means the market is pretty stable. Momentum is very strong. So right now we are at around 20 right now. So yes, there is some fear going on, obviously, with everything going on. So of course, so now let's go back to S&P, right? So if we look at S&P, let's go to the weekly time frame, just kind of see like the bigger picture of what's really going on. If we look, right, we can see clearly that we're in a clear uptrend right here, right? And we can see, just based on this, right, it don't take much to see it. You can see here that the momentum was very strong at one point, right? And you can see how it is slowly just slowing down. You can see how it's slowly starting to curve, right? So if I zoom in onto this structure on the weekly, right, we can see how that for the past, let's see, 1, 2, 3, 4. So for the past month so far, S&P has been, struggling. So if I draw this out right here, right? Where's my tools? If I draw this out, oh man, so I gotta move this. Oh man. All right, there you go. So if I draw this out right here, we can see how, so price came down, then swing up, making this equal high. Then we made a lower high, right? And then we end up pushing up, making a higher high, and then we made a lower high. I mean, not a lower high, but a higher low. We made a higher low because price fell. I always do that. I always get the words mixed up. But we made a higher low because it's higher than the previous low. And you can see how price pretty much broke this high. It barely did it. And then all of a sudden we had this huge drop below here. But it still closed above here, right? But it still got below here. That lets you know that, okay, hey, what this tells me is that, okay, selling pressure is kicking in, but buyers are still trying to keep it stable and keep it in control. But all that changed once price closed right here. So right now we here in this phase right now, right? So this is where we at in this current phase of price action. So if we kind of move this right here, you can see here that we're in a uptrend, but we can also see where price already dropped, right? And we kind of already retest off this current week on this level. So to confirm that this could end up going lower, right, we want to see something like this. This is what we want to see. Now that I got y'all attention, we want to see something like this. We want to see price retest like how it's already doing, right? And then we want to see it go lower, break lower, and then retest back into here, and then start going back lower. So if it does is right, then this would be a clear sign that we could be seeing S&P drop. So you can see clearly that the pressure is there. So I'm gonna turn this red and keep it, make sure it's only on the weekly. So we can see clear as day, okay, hey, yeah, the pressure is there. So it's just a matter, okay, hey, it's a matter of seeing if it can break below here. Now, if it break back above this level, right, which is this level right here, and we get back above here, then we can actually be seeing price continue going back up. So, and if it do, it might just test as high one more time, and then it can end up dropping. So, it's just a matter of just, being patient and letting price do what it got to do. So, if we are to have any kind of, drop, right, we want to see price break below, retest off this level right here as far as price wise, and then from here we could be seeing price drop. But right now everything is still stable right now, right? We're still kind of in a range where price can continue to keep pushing up, even though it is slow, showing pressure. And then if we go to the daily time frame, we can see more of that. We can see more of how price is slowly showing signs that it wants to drop. So it goes back to once price break below here, then we can start seeing. And on top of that, if you look at this, we're also on the 50-day moving average. So you can see how, one thing about the moving average, right? If y'all don't know how to use the moving average, I use the moving average in two ways. I don't never use the moving average as a entry. I use the moving average as a way of showing me that the trend is strong and this trend is weakening. So this is the 50-day moving average, and this is the 200-day moving average, right? So we can see just based off of this that we're in a nice strong trend still, right? But we also can see how slowly how we're approaching the 50-day moving average. So this 50-day moving average operate as a support level. So we know once that it break below this 50-day moving average, then that goes back to, like I was saying, based on the weekly. If it breaks below here, we can draw this on day two as well. If it breaks below here, right, going below our 50-day moving average, then that's a clear sign that we could be seeing price drop, especially if it get below the 200 moving average as well too. Then we definitely in a long-term downtrend, and this will be your full confirmation. Okay, hey, look, S&P is dropping. Once you start seeing signs like that, then that'll be a clear indication that, okay, hey, we are dropping. And then another clear confirmation that we are going to a bearish market is when you see from the current high, once price drop 25% from the current high, then we'll be in an official bear market. What I mean by that, so what that look like, if we go from the high and we drop down to this, 25% is literally, go a little bit lower. 25% is this right here. So this is 25%. So as you can see, we're still in that up momentum. So 25 from the current high, 25% drop is considered an official bear market. So, but is the signs there that we could be dropping? Yeah, we're getting very close. So that's what what my expectation, and especially if you see the VIX going above 22. So I'm giving y'all clear indication what to look for. So if you're a person who like trading stocks and everything, where you day trade stocks, swing trade stocks, you want to pay attention to S&P. Even for y'all people who do forex, or futures, you can even trade S&P on futures. But these are things you kind of want to look for. Like I said, S&P is a leading indicator. Now let's look at DXY real quick. Right now, I know this video is longer than usual, but I'm giving y'all a lot of good gems in this video to help y'all make smart decisions. Now I'm not a financial advisor, so everything is at your own risk. You want to still go back and do your own research, or whatever your style is. Wait for things to line up based on your style. But let's look at the DXY. Why DXY is very important, because guess what? If based on what Trump is trying to do, Trump's whole plan is to weaken the U.S. dollar. Why? Because with the U.S. dollar can do a whole lot more with it. So if we look at stuff, if that is a plan, look, let's pull this out right here. On the previous day, you can see here. Let's zoom into this. So we're still in a downtrend. Like I told y'all, I'm bearish this week. If y'all been keeping up with my daily breakdowns, I'm bearish on DXY for this week. We can see here that we had this nice long rejection on the previous day. So what that tells me, that's giving me a clear sign that sellers are still in control, and we could be seeing price, continue pushing back down, right? And we go to the 4 hour. Right now we are in this nice little, up momentum, but it's nothing but retracement, So, but if we just go back and look at the overall week, right? Let me change this so I can focus on this right. So focus on these highlight candles. This is showing me the weekly time frame. If you look right, last week we overall closed bearish, so we're still within that same range. So that's why I say from a higher time frame, we could be seeing DXY continue to drop. So, and why the US dollar is very important to focus on and look at as well. It goes back to, this is another a leading pair that you can use as a leading indicator for other stuff like Forex. If US dollar is dropping, then guess what that means for stuff like euro? I mean, euro should be going up. What about yen dollar? I mean, yen dollar should be going up. Hey, and that's another thing that goes back to, yen is also talking about strengthening for years. Yen been having a weak dollar. They're talking about strengthening their dollar. So and stuff like GU could be going up if US dollar continue to drop. Things like USG, UJ, for those who trade UJ. If DXY is weakening, then guess what that means for UJ? That means UJ could be weakening. So just kind of give you a little insight on that, right? So that's kind of like my input on that. And then let's look at UJ, right? You can see UJ as well. UJ is was bearish the previous week as well too. As you can see, let's go back and focus on that so we can see we was definitely bearish on UJ. And you can see how we're within that same range of the previous week, right? So far, it just kind of really been in a choppy phase, like I always tell y'all. After price drop, it has to rest and build liquidity first before it makes the next big move. So, does it mean it can reverse? No, we could still be going down. My expectation is bearish too because DXY. Let's go to gold real quick, see what gold been doing so far. Give you a little update on that. So look at gold. So gold has as well was indecisive the previous week. Like I told y'all, the objective was to see if this was a true sell-off, because we can see how last week price dropped down hard and we were still within that same range of this huge drop-off, right? So we can see how the momentum is pushing out. Like I told y'all, if we get back below 5,000, then we could be seeing price, dropping. Now that we below this level here, right? Yeah, we could be seeing gold potentially continue to drop, So especially with this pressure, but I wouldn't, I would just be patient, you know what I'm saying? Like I wouldn't be in a rush to get into a position. But I can say on the previous day, we did close bearish on the previous day. So because we did close bearish on the previous day, right? That's clear signs that we could be seeing gold drop even lower, because like I say, we did came up, broke below, retest, and then went down lower. So what that tells me? That tells me that we have signs we expect price to push up first a little bit and then start going back down lower. So that's my expectation to expect what gold to do based on what it's doing right now, right? All right, so that'll be all on today's, market breakdown. As always, the goal is to survive long enough to win. It's not about, it's not about trying to avoid losses or trying to make home runs. It's about surviving long enough to win. And if you can do that, you can be profitable. If you can have proper risk management, control your emotions, not overtrade, before you enter in on your trade, you want to make sure that you know where your setup is no longer valid at, and that's where your stop loss is at, and that help you understand how much you should risk. Only risk what you can handle, right? And if you can do that, it'll make it more easier to take trades. Follow your plan. You should not be trying to predict price. You only should be following your plan. Or other than that, read market structure, So other than that, I will see y'all on the next market breakdown. I know this video is very long, but it has a lot of very good insight in this video. So I hope y'all like it. Also, make sure you like, subscribe, and hit the follow button.